In this last section, what I'm going to invite our panelists to do is speak to a key learning from their vast experience over their career that has stayed with them, that best illustrates governance or financial reporting or internal controls. And I'd like to start with Joel, to my right.
A number of years ago, I went to work as a chief financial officer for a family-owned real estate company. It consisted of a number of management companies and approximately 40 different limited partnerships that were owned by probably anywhere between 15 and 40 individual partners. And when I joined the company, the basic accounting was being done, but there was a lot of time and energy on a lot of unnecessary schedules, and not a lot of time was focused on meaningful schedules and consolidations and helping the principal understand where he stands. So the initial benefit is getting the records up to date and issuing the K-1s on a timely basis, which certainly helps investor relations. But more importantly, by putting together consolidated assets, cash flow, and tax information, it enables the principal, one, to do proper tax planning, schedule out cash flow for his needs, and when necessary, which was very valuable to expand the business in real estate, he was able to take this information, go to a bank, and obtain a number of unsecured lines of credits based on the information. And a lot of time it's simply putting this in the right format with the right backup so the bank or the lenders get comfortable with the information. And all of that took place, and it was very helpful. And on the individual property level, setting up the proper spreadsheet that covers all of the property information so you can do your accurate budgeting, oversee the operations, made a big difference in controlling each property. And then when it was time to do a refinancing and go to the lender again on a specific property, it didn't take a lot of time and energy to just update those schedules, bring them in, and get whatever financing was needed.
Thank you, Joel. Vic?
You know, we constantly worry about what can go wrong, and we try to channel that worry into the most critical or high-risk areas. And in most organizations, whether it be a family office or any kind of enterprise, we normally take a very hard look at disbursements, check signing, check disbursement, wire transfers that we talked about before. And I personally get very upset when we review situations where a client of ours would boast about dual control. I have a primary signer on a check and a secondary signer or a co-signer. And when we look at the effectiveness of that control and ask the second person, what do you absolutely look for when you sign a check, and get a response, well, I make sure that the first guy signed it. That's not a very effective control at all, but it's all too common in so many situations. We have another client that's taken it to the other extreme. We talked about streamlining and efficiency in the Smith case. We had a CFO take it upon himself to automate the check signing process, which was a dual signature process, by manufacturing a single signature plate and bypassing the second signature altogether and just running the checks through the signature plate. Very efficient, but not very effective from a control standpoint.
John, what would you like to share with us?
Many years back, I was working for a family office, and I guess I'm just going to take a quote from one of my colleagues, and he told me pretty much to expect to inspect. So when I took this position, I worked directly for the president, and looking around the office, it was a small family office, about 30 people, and there was one gentleman who was handling the pension account, and he was very flashy. And when I got there the first time, people would tell me that he would get limo rides to work and limo rides home, and he would see the best Broadway shows and sit in the front, and it was just very suspicious. Art. Yes, exactly like art. And so as I started to inquire and get comfortable in my position, I started to take a look at the pension account, and the first thing I looked at, as you know, they alluded to earlier, is the bank reconciliation, and there were some items on there that were very questionable in large denominations that were stale for many months. We went, discussed it with the president. It was actually a fraud. that had taken place, we immediately dismissed the person. But the point that I was trying to make is that you really need to take a look at the people around you and observe what's going on, and drill down and really find out. It goes back to the segregation of duties. They were doing wire transfers without second approval for large denominations, and it went on for about 9 to 10 months. So that's one of my war stories.
Before we go to Art, what each of you are citing is rather fundamental business practices that, when not observed, can cause the multitude of perhaps the problems that you've identified. Art?
The guy was a real smart crook, wasn't he? Steal and show everybody. I had one that was a little smarter. Small family office, accounts payable clerk, did the check writing, not the check signing, bank recs, and the check signing was done by the controller, for a better word. What she did was, with the manual checks, and she had computerized checks and manual checks. The manual checks was perfect. They had the pile, they had the invoice behind it, brought it over, person signed it, everything was fine. She took it back to her desk, and it was erasable ink. And she erased the top, and then put cash on it, and cashed the checks, and she kept it under the radar screen, actually, for years by just laughing and keeping it small. Eventually, ultimate greed corrupted ultimately. She got greedy, checks got bigger, and eventually a couple of them started bouncing, and she wasn't there, and the controller picked it up. But that went on for several years. Moral of that story is that there should be segregation of duties, and you shouldn't have the person that's doing the checks also doing the bank rec. If you were doing electronic checks, one thing you might consider is they have what's called positive pay, which doesn't allow that to happen. It's through the bank and it's on electronic checks, but you could set up a system where the payee and the amount has to agree before a bank will cash a check.
Great, thank you, Art. Before we turn this back over to Marie in the break, this summarizes our discussion to this point on governance and controls and financial reporting. In our next panel, we're going to learn about how now, on a forward basis, creating wealth. Certainly this panel has been focused on protecting current wealth. So we thank you for your attention. I'd like to turn it back now to Marie.
Okay, thank you. So